All right, good morning, everyone. We'll give people a few seconds to come in. I'm sure they don't want to miss this. So I have to give thanks to Ryan and Missy for the title. This is definitely more elaborate than what an engineer would come up with. It would just say resource planning. But we'll try to talk through this. It's a very exciting topic. It's very relevant to what we're doing at OEC and also around the country, so we'll get into that a little bit. Should have plenty of time at the end for questions, so feel free to ask those once we get there. So, all right, so why are we talking about resource planning? So there's a number of reasons you can see up here. Most of the media, the focus is on data centers and artificial intelligence, which is certainly a very big contributor to resource planning, but there are other factors as well, like reshoring manufacturing, electrification, maybe EV vehicles, maybe more so in certain areas than others. But really what we're seeing is just a general increase in electricity use. Just to give a little bit of perspective, we were around 8.8 million megawatt hours, maybe for roughly 10 years. It would move up and down a little bit. Our current 12-month rolling average is close to 9.5 million. So again, we really haven't seen data centers come online in our territory or your guys' territory, but we are seeing the increase in energy consumption. So very relevant topic, and really the question around the industry, not just locally or in our region, is what are we going to do to serve these loads? And that's really where resource planning comes in, and we'll dig into that a little bit more. So just to start, what is resource planning? And really, this is an ongoing process. It's not something new, but it is something we really haven't had to visit for the last 10 or so years since our last resource decision in 2009. But again, with our energy consumption and demand going up, it's something we need to look at, and it's looking at long-term forecasts. So what do we see today? What do we see over the next few years? And really, what do we see 10 to 15 years out? And how much energy consumption are we going to see on a demand basis? So really, how much is going to be used at any instance? And really, what's going to be the energy requirements over that time period? And then what resources do we have available to meet that demand in energy? So one thing when we're looking at this, load projections, look fairly smooth and mostly linear. When you look at adding power plants to your portfolio, they're not smooth and linear. So you're either adding, a small peaking plant that might be 150 megawatts going to 400 megawatts, or you look at the cardinal units that are 600 megawatts each. So it's a little difficult to balance, as you've got kind of a linear load growth, how much generation are you going to add and when? And so timing's a big piece of that. You're either going to have market exposure on the front end by having maybe too much generation if you do it early. If you wait a little bit, you might be buying a little bit more from the market on the early end as you let your load growth increase over time. So timing plays a big piece of this. Resource planning has a different meaning for multiple people. So if we look at it at Buckeye Power and OEC, our job is to try to provide resources for all of you to serve your needs and really to be able to provide stable, affordable, and reliable electricity. If we look at PJM, the region we're in, a much bigger focus, and they're trying to look at a 13-state region and really how to keep get enough electricity in that area to maintain reliability for the whole region. So a little bit different, purposes for this. And since there are differences, I want to start at a national or regional level just to give you guys some perspective on what's going on around the country. And I'd like to start with this chart that's, very busy, shows all the generation resources around the country. So each one of those dots is some form of generator. And what you can see is there's a lot of them, thousands. There's different resource types, depending on what part of the country you're in. Over 1 million megawatts of generation, so we're about 2,000 megawatts, so just to put things in perspective. And so when we're looking at this stuff, we're not in a vacuum. We have to be aware of what's happening around us, what everybody else is doing, and how that might impact us as well. And if we look at the high voltage transmission map, kind of a similar, perspective is a lot of high voltage transmission. Everybody is connected to each other, especially in the eastern interconnection. So all those high voltage lines are connected. And again, we can't do this in a vacuum, and what our neighbors do might have an impact on us and vice versa. So it's something that we have to definitely be aware of when we're doing our resource planning. So at a high level, just, what are the industry trends? Again, rising electricity demand from reshoring of manufacturing and electrification. Really, data centers and artificial intelligence, again, and we'll get more into that. It's a different animal. So manufacturing before, a large load was 20, 25 megawatts. Maybe a Honda facility is 50 megawatts. And when we're talking about data centers, a very, very small data center now is 25 or 50 megawatts. The ones we're getting requests for and we're seeing around the industry are more in the order of 500 to 1,000 megawatts. So just a very different scale. And then also the speed to grid that they want is much faster than you would see like a manufacturing facility kind of ramp up over time. So they want that 500 or 1,000 megawatts in 2 or 3 years. The time they can, build a warehouse, bring servers in and get those chips in there to produce, whatever they need for their data centers. It's just on a very different time frame when you're looking at power plants that might take 3 to 5 or 5 to 7 years on the gas side and a longer lead time with nuclear. So again, just kind of a different animal, a different time frame on those. We're still seeing thermal generation, retiring around the country and in PJM, whether it's due to state requirements that they have mandated retirements, environmental rules. And in PJM in particular, we have not seen replacement generation coming online at the same pace of those retirements or being able to meet the forecasted demands. And so one of the things, we've been talking about this for a few years. We've seen the kind of warning flags and coming. PJM, I would say, kind of really woke up recently with one of their auctions where they try to clear for their peak load in the summer, and then they have this buffer on top of it to be able to handle when power plants are offline or you get extreme weather. And recently they cleared their capacity auction, which came short of that reserve requirement. So that's the first time that's ever happened in their footprint where they did not get enough generation to clear the auction that they wanted. So that's going to drive a number of things around us that I'll get into. Wanted to give a high-level view of the data centers that are currently around really the PJM region, just since that's where we're focused. You can see these blue dots are really around all the major cities. They started in Northern Virginia because there was power availability, but it was also the underground fiber that linked the US to Europe and what drove the big expansion of data centers in that area. As that transmission area and power availability became constrained, they started moving west, and really Ohio and Central Ohio is becoming really the next big hub for data centers. So what do all those dots really mean? So here's a recent load forecast that PJM put out. Just to give some history, the gray line is about 25 years of history of what their peak demands were. Roughly 150,000 megawatts, maybe a little higher or lower over that 25-year period, but not major changes. The blue line was the data center forecast that they published in January of 2025. You can see it going from about 150,000 megawatts to 200,000 in 5 years. again, started to raise, some red flags and some concerns at PJM and everywhere else on how we're going to serve this. 2026 forecast came out, and PJM pretty much had to call a timeout. The original forecast was almost double what the blue line was. They implemented, along with some other companies, new guardrails to really try to figure out which of this load, how much of it is real and how much of it might be redundant and asking for the same thing in multiple areas. So PJM went through that process, and you can see the green line, at least for the next 5 years, is actually lower than last year's forecast. They went out and made these transmission companies prove that they have firm contracts with those data centers before they would allow them in the queue. And the importance with that is PJM uses this load forecast to determine how much transmission to build over the next 5 to 7 years and how much generation they're going to need to be able to meet their reliability requirements. So the higher that value is, the more transmission they build and potentially the more generation they need to pay to keep online. And so it's really important to have accurate load forecasts, whether it's at the PJM level or at our level when we get there, really to prevent overbuilding and essentially having stranded costs potentially, that everybody else has to pay for. So that's something we're really trying to focus on and minimize that risk. So just as a quick, overview again, there's concerns about grid reliability around the country. Every major entity is involved in these conversations. Things are starting to kind of come together and point in the same direction, where a lot of these federal entities are going to say new data centers are going to require either new generation to be built before they can come online, or they have to be interruptible so that PJM or the transmission owners can shut that data center off before there would be a need to curtail any residential or commercial loads. So they're really trying to put a lot of backstops in place, really for reliability, and something we think is the right direction and something our board approved yesterday was a data center tariff to really formalize those requirements in an agreement, and so we have the ability to tell data centers what our expectations are. We might be a little ahead of the industry, but PJM and FERC are likely to have very similar rules finalized in the next few weeks that will line up with that. All right, so if we just talk about some basics of resource planning, number one, having a clear strategic priority for the organization is really important. What do we want to do with resource planning? Do we want to hedge all of our load, both capacity and energy? We heard a lot of that conversation this morning about strategic priorities from Richard. And really the past year, there's been a big effort at OEC to really make sure our priorities are correct. A lot of engagement with the board and the committees to do that. And out of that, again, making sure you have the right committees in place. We have this new power supply committee that's going to be focused on this issue, really to make sure we can execute on that plan. Having a well-defined load forecasting process. So this is something we've been doing for decades, a requirement all of our co-ops have if you do RUS borrowing. So we've got a group at OEC that works with all of your co-ops to put together an annual load forecast that looks out 15 to 20 years. So we have a very good process already for this, and we'll work through the additions of adding data centers into it. Another critical piece of this is understanding the generation resources that we already have. What are the strengths and weaknesses? How do we see those performing over the future? And really the longevity of them and what potential risks we might have. So I'll get into that in a little bit. And then identifying what additional options might be out there. So I'll talk about the different types of resources and some of the activities we're doing to make sure we're in the loop and really included in any conversation about new power plants being built in Ohio or anything being sold in Ohio as well. And then, like I mentioned, we're not in a vacuum. So we really have to be knowledgeable of what's happening around us. We have a very active regulatory group that works with PJM and FERC, not just to understand the rules, but really try to influence those rules to have reasonable outcomes, really to protect, from cost shifting and to maintain reliability. So a lot of effort's been put into that area. So if we hone in on just like a simple version of what resource planning looks like, here's a single day. And what we're looking at is the black line is our load curve for that day by hour. This is a summer day from last summer. It was the highest load that we saw. So we peaked at about 1,800 megawatts that day. You can see it dips down in the morning, goes higher in the afternoon as AC ramps up and all the businesses are still online. And then all the bars below it are a stack of our resources that we currently have. And so like we do with how we allocate costs and how we just look at our resources in general, we stack them up from least expensive to most expensive. Whatever is under the black line gets assigned to members, and that's the fuel cost they would pay for that. Anything above it is excess generation that we're selling to PJM. So what I want to point out is you can see we've got a number of baseload resources, our coal units, so Cardinal and OVEC, available all day, really all year. We do have some dispatchability, so when prices are a little lower in the morning, the coal plants ramp down so that they're not at full output. And then when we get to the peak times and prices go up, we turn on our Greenville and Moan plants, our peaking gas plants to be able to meet that demand, where we can cover our member requirements fully and actually sell a little bit back into the market. So this is a very simplistic look of a single day, but when we're doing resource planning, we're doing this evaluation for multiple years at a time on an hourly basis to figure out where are our gaps, where do we have too much, and what are the resources that we could fit in the future to kind of fill in those areas. So again, that's kind of the general mix. We're in a really good position currently with our assets and what we see coming up for the next few years. But I will transition to this slide, which are data center requests that all of you have received and requested through Buckeye Power to get transmission studies. The blue bar on here is our peak load that we've ever had, so 1,900 megawatts. The red bars are the data center requests that we've received, again, from all of you and have transmission studies for. A couple things I want to point out is you can see the red bars are growing fairly slow through 2031. That's not because the data centers don't want it sooner. That's because the transmission system cannot handle that much demand right now. So again, there's a lot of people that look at this. We're not going to just let data centers come online and impact grid reliability. There will be a planning process to try to coordinate this. Once the transmission line's estimated to come online in 2032, you can see how that load ramps up. Similar to PJM, I'm a little skeptical that we're going to get all of this. Again, I think they're asking us for these studies. They might be asking AEP for the studies. They might be asking about, different parts of PJM for the same load. So we're trying to put processes in place to really identify that, and we'll work with PJM's requirements going forward as well. So since these are data centers, we've got our kind of native load that I showed on the prior slide. We have resources dedicated to that. What this new data center tariff pretty much says is we're going to keep our existing resources for our existing members. We're still going to plan for these data centers. We're going to go through the same resource planning parameters, but we're going to separate the resources so that data centers will have either new generation that they bring to serve their load or go with PJM's requirements where they would have to be interruptible as well. So we'll have kind of two different resource planning processes going on, one for our native existing load and load growth, and then one for data centers. So want to touch again on our current resources. I think we have a lot of strengths when we look at these. You guys have seen this map before, but the upper left is our Moan peaking plant. It's 3 gas turbines, very flexible, can ramp up and down very quick. It's typically 5 to 10% usage, throughout the year. But during this cold weather spell, they pretty much ran around the clock for 7 to 10 days. So again, that'll be something we have to balance out maybe for the rest of the year. We have a lot of fuel security when we talk about Cardinal and OVEC. Like Bethany mentioned, we've got 30 to 40 days of coal on the ground. That's a huge benefit. That's something that's very difficult to replace when we're looking at future resources. Moan and Greenville, being gas, have a little bit more exposure during these cold weather spells on whether gas is available or just to the price sensitivity. We see very high prices for gas during the cold weeks that we had. And something the board and management have put in place over the years is to have fuel oil backup on site there. So again, gas by itself is not a fuel secure resource, but we have about 2 days worth of fuel oil on site. So we have a backup source there, and we did burn about 30 to 40% of our fuel oil over that 2-week period. So a real great asset to have. A focus of the board, again, has been on dispatchability, fuel security, and having reliable resources, which we have a real great portfolio right now. One thing I wanted to mention, so Bethany talked about the performance of Cardinal over the last couple weeks, and just to give you guys some perspective on what that means, if you didn't have these resources and were just buying from the market for that 1-week period, it would have been about, a different way of saying it, our resources were about an $80 million value compared to the market for that single week. So the ability to provide stable rates really comes down to the assets we own, the fuel that we have, and really the long-term nature of those assets. So those really performed well, reduced what our expected costs will be for our members during that cold period, and actually provide a little bit of a benefit as well. Again, our general philosophy has been to own and operate generation. So this has been a decision the board's made back with the start of Cardinal 2 and Cardinal 3. Again, you can't do these things, just adding a few megawatts of generation here or there. The board back in 1977 decided to add another 600 megawatts of Cardinal 3, even though we didn't need it right then. They had an agreement with AEP at the time where we knew there would be excess, and we had this capacity bank arrangement. But it's been part of the philosophy is to have our own assets. It gives us a little bit more control over the operations and the fuel cost instead of relying on other people. The graph on the right is just a simple look at what our generation capability is in the summer and winter versus the peak demand. So again, we're in really good position right now where we have about 300 to 400 megawatts of length if everything's online in the summer, and about another 200 megawatts or so in the winter. So again, really good position for those resources. So what's this mean if we look out into the future? Here's a similar chart that I just showed where the black line pretty much represents how much generation we have, and we've got load forecast out through 2040. And we still have some excess for the next, almost 10 years, but you can see we're getting close to the point where, the board may want to consider incremental generation as we get close to kind of that break even in 2032 or 2033. So this will be a big focus of our Power Supply Committee and discussions with the board as we move over the next couple years. One thing that we're very aware of is, depending on the type of resource we're looking at, you might have 3 to 5 or maybe even up to a 7-year decision if you're going to build new. And so that time frame of the early mid 2030s isn't as far out as maybe it looks. So again, this is on the forefront with our new Power Supply Committee. And then there's multiple different generator types out there that we'll talk through. Again, they all have their own strengths and weaknesses. And then there's also different resource structures. So whether you own it and we go out and build new, we partner with somebody else, potentially buy an existing power plant, or maybe do a PPA contract with somebody, a power purchase agreement. So there's multiple options out there. They all have their benefits. Whether or not, time frame, if you're going to build something brand new, probably has the longest time frame versus potentially buying an existing plant. But you just don't know when those existing power plants might come up for sale. So something we've been very active in, we saw, when we looked about a year ago where we could improve, and that was really trying to get in the loop with all these power plant developers, whether it was private equity or independent power producers, is getting into that circle that if they're building a new project or they're going to sell something, that Buckeye Power is one of their phone numbers that they reach out, and we can at least evaluate whether that might be a good decision or something for our board to review. And so we've put a lot of effort into that. We've had dozens of meetings with the private equity and independent power producers, as well as all the turbine OEMs, to know what their lead times are and costs for new power plants. So that's been a big effort so that we can actually evaluate what's going on around us. All right, so here's a list of really the generation options if we're looking out there. I'll try to go through some of these at a high level. Coal, existing coal for sure, we want everything to stay online. We're getting a lot of interest from PJM, Department of Energy, to ensure that we try to keep our resources on. I know Craig's going to talk about Cardinal 3 a little bit later. We are planning to do whatever we can to evaluate the life or being able to extend Cardinal 3 as long as it's a benefit for all of you guys. We don't want to commit to something that maybe is a negative outcome, but that's something that's going to be ongoing and a work with the PJM and the Department of Energy and really through December of 28 to figure out what can happen. As far as new coal, there's a few areas of people talking about potentially bringing new coal online. There's a lot of future environmental risks to really, if you go out and want to build an asset that's 20 or 30 or 40 years, that's a pretty big risk to be, putting billions of dollars into a plant that just the prior administration was really trying to shut everything down, and we don't know what the next administration looks like. In addition to that, we would expect you would need carbon capture and sequestration, so that's a technology that's really not that viable right now. I don't think any really exists, at least in the US. So again, it's something we'll keep an eye on. It's not probably a likely outcome for a new power plant. Nuclear gets a lot of media attention as well. I'm hopeful at some point that this really becomes, a resource that we can all potentially share in. A lot of challenges with nuclear. The last plant that was built down in Georgia went about 10 years over on construction, and I think $10 to $20 billion over on cost. So it's just a challenge. There's a lot of uncertainties. There's a lot of talk about small modular reactors, which sound great. The rules just aren't written yet for them, the regulations. So again, you've got dozens of designs out there that are all working through the process, trying to figure out, can one of these, viably, make a business path going forward? The one potential benefit and how that ties with data centers is data centers typically use 24/7 power. These hyperscalers like Amazon and Meta and Microsoft all have a ton of money, and they're investing in some of these designs as well. So, again, a hopeful outlook is that they put the money into it, figure out the right design, can get a couple of these online where we're not, a number one serial number, and maybe is the next resource down the road. And again, something we'll keep a close eye on. Natural gas combined cycle, very efficient power plant. So burns about 30% less fuel than maybe if you compare it to a coal plant. So very efficient, can run base load. The downside, again, you're relying on a natural gas pipeline system and don't have the same type of fuel security you have at like Cardinal or at a nuclear plant. Combustion turbines, again, similar to Moan and Greenville, are very viable options. They're known technologies. They're available. They both can fit different needs. And then, wind and solar, if we look in the PJM region, not utilized as much, and part of that's the natural resources around here. Wind is more prevalent in Texas and the kind of central part of the country where you get better capacity factors. One thing we've learned is you want to have your generation close to your load. So if something happens, you want your generator to be paid the same as your load, and we had that learning experience with Story County Wind. Solar, just to talk about some of the potential impacts from the market or other forces that are put on us. Solar in the PJM market used to get a 50% kind of capacity rating up until about a year ago. They changed how they evaluated power plants, and probably in the right direction, but they really took into winter capability more so than summer. So if most of you know, we're peaking in the winter at 6 or 7 o'clock in the morning, not as much solar activity, and so that rating went from about 50% down to 7 to 10%. So that's something, people go and invest again in a 20-year asset. You think you're getting a 50% value for capacity, and the market rules change, and now you're getting 7%. So it's something we need to, again, we're very active in and need to be able to try to understand what the potential risks are for any resources we have going forward. The last one I have on there is batteries, so battery storage. These are utilized, again, more in some other parts of the country. Texas has really expanded battery storage, and that's due to the market signals that they're getting. PJM doesn't really have those right now. We are still evaluating batteries. We think there's a potential more on the demand response, peak shaving side of things, where maybe you would add them at the substation level or behind the meter, where we would be able to reduce our peak for capacity and transmission costs. But again, maybe not as a just general resource plan, but for peak shaving. So again, there's always a trade-off with any technology that we're looking at. The tension between how much something costs and how reliable it is. Do you want it around the clock, or do you want it over peak times and you want to rely on the market, at other times? Like I mentioned about coal, there's just a lot of challenges for new builds there. And then nuclear has long lead times and really uncertain regulations at this time. Hopeful for the future. We're seeing a lot of these small modular reactors are saying maybe they'll have the first one in by 2030, just to give you guys a perspective on the time frame there. And then to really ramp up from there, we're probably another 10 or so years even past that. So if we look at this or ACES, which we're a part of, most companies, when they're evaluating what resource is available to really meet peak demands and to provide energy, you've got two options, gas or gas. So combined cycle, if you need capacity and energy, is a really efficient option. If you just need, again, to hit those peak demands over the hottest and coldest days, that's where the peakers like Moan and Greenville come into play. So again, that's what everybody is seeing when they're doing these studies. That's the available technology. And so what's that done is it's driven up costs for combined cycles and CT plants. So this shows over the last 6 years, the price of those power plants has about doubled. So some of that's from utilities buying those plants, but it's also the data centers buying them to potentially put generation on site behind their meter. So a lot of changes here that makes the economics, a challenging thing when prices have doubled, and trying to figure out, are we going to be at an inflection point where everybody's kind of rushed to overbuild with this, or is this the new trend? That's something we'll see. We'll see how these load forecasts come out and if the data center build out really is as high as everybody's projecting currently. But just a call that Ben and I were on last week with a private equity company. They mentioned that they have 8 turbines already sitting there and ready, so they don't currently have plans for them. That gives me a little bit of hope that maybe a lot of people have gone out and bought turbines, tried to get in the queue early and maybe try to either flip them, or they had high hopes of building something and maybe it's just not coming to fruition right yet. So natural gas prices have gone up, but just want to give you guys, again, some perspective on what that means compared to some of the other technologies. The natural gas plants are in the left column, so again, between $2,000 to $3,000 a kW is the unit of measure here. And on the right-hand side, you can see how that compares versus advanced nuclear, with Vogtle being the most recent power plant built down in Georgia, where they were around $30 billion for the 2 units. So enormous numbers that we're talking about here. 1,000 megawatt combined cycle is probably $2.5 to $3 billion. Nuclear, though, again, on that same scale, is 15 to 20 billion. They're going to be tough conversations, trying to figure out what we need to do, again, to meet expected load growth. And I think, like some of you guys already mentioned, is some of the plants we have, like OVEC is turning 70 this year. We can put a lot of maintenance into them and keep them running reliably, but at some point, is there a time where the board wants to move forward and really expand into a different or a newer technology? And those will be, again, things we talk about at our power supply committee. So a few other considerations we have, again, is how does everything fit? What's the resource fit for the load forecast, and how does it fit with our existing generation mix? Are we looking for energy, capacity, or both? What's the time frame on those? Again, there might be an opportunity where somebody's looking to sell a power plant in the state. It might not perfectly fit with our load forecast, but it fits economically, and those would be things we need to evaluate and discuss with our board. And the real big thing that we're all cognizant of is what's the impact on rates for all of you. And so something that I'm happy about, I guess we're fortunate to be in this position, that the earlier board decisions over the last 10 years have put us into a really good position. This chart is showing our debt payments over the next 20 years. And something they really tackled was, how do we try to minimize stranded assets? If somebody comes in and says we either have to shut our coal plants down or we're in the need for new resources, what can we do today to help minimize that rate impact in the future? And so where that yellow circle is just a possible timing as our debt payments come off. That's a potential time to add new resources and really try to minimize the rate impact for all of you. Again, something we're very aware of and trying to do what we can to bring those debt payments down and, again, give flexibility to future generations and really minimize any rate impacts, since these dollars are quite large for new power plants. So just a little bit of a wrap up. This is an ongoing process. It's something that we're looking at on a daily basis as staff. It's something we bring up in our board meetings on a regular basis. We have our power supply committee at least twice a year. We're meeting with all the companies that we could potentially partner with if we need new generation. It's important to note that we're planning to do whatever we can to keep the life of Cardinal, Ovec, Moan, and Greenville as long as possible. There's a lot of investments that the board has decided to make to keep those plants reliable, like Bethany talked about. And then the market rule changes and just federal regulations that might be imposed upon us is something we'll just always have to be aware about and really involved in and advocating for reasonable changes there. And again, I'm appreciative of both the board and the Power Supply Committee. It's going to be some challenging conversations as we move forward over the next couple years, but they're very engaged on this. Everybody, I think, has the same purpose: is maintain reliability, provide stable and affordable rates. And I think it might be a little scary, but it should be a fun process as we're going through this analysis, and again, working with everybody here to maintain rates and reliability. So, all right, thanks for all the great questions, everyone.